the guidance would be essentially if we were doing 500 mil daily volume, and let's say we take a take rate of about 3 basis points. I think that's kind of market standard. If you look at some of the other exchanges, Hyperliquid, I think their kind of taker fee is anywhere from 2 to 4.5 basis points. And on the maker side, it's a little bit lower, but like averaging out, let's say 3 basis points. That would essentially give us a daily revenue of $150,000. And if you annualize that, that's essentially 55 million. Basically taking their kind of proportion that goes back into their assistant fund buybacks, they do 97% essentially, which is pretty aggressive.
Okay, welcome to another episode of BidCast. I'm your host, Jason Kam, aka at Maple Leaf Cap. Today is June 18th, 2025, 10 a.m. Hong Kong time. BidCast is being live streamed to Bid Club members. Questions are from the members and my own. This is not financial advice. Today I'm speaking with Tristan, co-founder of Zeta and soon to be Bullet. Tristan, welcome.
Yeah, great to be on here, Jason. Really, really appreciate it.
Yeah, nice shirt. A lot of people don't know this, but you can buy the Bullet Exchange token now through ZEX Zeta token. It's kind of an interesting best kept secret until it became public with Ansem and I guess Monk a couple of days ago. I think it's on people's mind. Pretty straightforward. First question: how long have you been working on Bullet? And maybe just walk me through the journey of the past 4 years when you built Zeta, Option, DEX, and then this. Like, how did it evolve, and how long have you been working on Bullet itself?
Yeah, good question. I guess the truthful answer is pretty much 4 years at this point. We've been basically full-time building in DeFi. We started off in the very early days of 2021 trying to build a derivatives exchange. We started off building essentially options, and that was the inception of Zeta markets. And then we essentially kind of pivoted more around the time that FTX melted down into perpetuals trading, just finding a lot more PMF on the perpetual side, as well as just it's a much more simple product to build. And so we were one of the very early Solana projects. There was nothing there back in the day, back in 2021. And I was fortunate enough to meet Anatoly and was very impressed with his vision and what was possible on the chain. And so we kind of pioneered that fully on-chain order book, off the back of Serum, which is essentially one of those kind of core primitives back in the day, more for spot trading. We decided let's extend that for options trading and then perps trading. And so we had a good amount of success, especially last year when Solana really started taking off. We scaled to over 100,000 users, roughly 150,000, I think. And we did $15 billion of notional kind of perps volume traded through the platform. So that really gave us a lot of clarity on how to build a good exchange. And I would say more recently, probably about a year ago, we decided to kind of kick things off with Bullet specifically, which was kind of a more focused bet on specific infrastructure for perps trading. We essentially had run into a few kind of technical and scaling issues with fully on-chain order books built on Solana. We can dive into the specifics later. And so we made this slightly more ballsy pivot into doing our own kind of roll-up execution layer for Solana, and that's what ended up being Bullet. And now we're on testnet and getting a bit closer to mainnet, so we can kind of share more on that later.
Yeah, I guess this is a pretty straightforward question. I guess for those who don't know, maybe tell me a bit more about the engineering team's background. Like, at least to me, a perp DEX is anybody can kind of build it, but to make it good, it requires a lot of technical chops. Like Jeff at Hyperliquid prides himself of being HRT and really deep from Wall Street. Like, what qualifies you guys to build this? Technically speaking.
Yeah, that's a really good question. I respect the Hyperliquid guys a lot. I've met Jeff before and chatted to him, and I think he has very deep knowledge of the space. And I think it's great that they worked on the trading side through Chameleon for a couple of years, and that gets you really intimately familiar with how exchanges work, at least from kind of like a user perspective, and then flipping to be the other side in the exchange builder. I think there's a lot of good context there. I guess fairly similarly for us, like a lot of our team had been in crypto for a number of years. I'd been in crypto since 2017, kind of like on and off. A bunch of my other kind of friends, we kind of started from just a bunch of us, from university, essentially all knew each other for quite some time. My background is more in technology and those kind of systems, but thankfully my co-founders and a bunch of the early team were all from HFT trading, and that's why I was kind of friends with them. I was always dabbling in crypto and HFT stuff for a bit. And so we have a pretty strong bench, I would say, of talent there, both on the HFT and crypto native side. For example, most of our backend engineering team comes from top firms like Optiva, IMC. If you're familiar with a bunch of these kind of traditional firms, they're basically some of the top tier electronic market making firms, similar to Hudson River Trading, I guess. And in terms of crypto native talent, for example, my co-founder actually used to be one of the first market makers on Kyber Network back in, I think it was 2017 or 2018, when like DEXs were really starting to take off. We also hired people more recently, for example, on the growth side, hired the guy who used to lead product growth at Bybit and who's kind of seen a lot of their kind of growth systems work really well. And so, yeah, I think we have a good mix of talent there. And like you said, building an exchange is a highly technical, complex system. And to that effect, we've been building over the last couple of years. We've never had any exploits. We've run an exchange in like a pretty good fashion, I would say. We take a slightly more kind of conservative approach, trying to do things the right way and trying to play that survival and that kind of like long-term game.
Yeah, that's good background. The and why build the club not on a Sol L1 and opted for a roll up on top? I think and how is it different than like other things like Soon and Sonic, I guess?
Good question. So it's pretty loaded questions. A lot of stuff in there. I could probably talk for a very long time, but I'll try and give you the long and the short of it. Essentially,
yeah,
I would say about a year ago, or even longer than that, in the bear market, we were just kind of hitting some scalability issues, but those issues essentially got exacerbated when things started to pick up in terms of adoption. And I'd kind of chatted to Anatoly and some of the engineering team on some of the issues that we were doing, scaling kind of fully on-chain order books. And I think now they're obviously in race mode trying to get all this stuff fixed, but we didn't have the liberty of time. We had to kind of take things into our own hands, essentially, as an application. And so to kind of rattle off some of the issues, Solana still has discrete 400 millisecond block times. If you compare this to Binance, which is basically the primary market for price discovery, that's happening at about 5 to 10 milliseconds. So you're basically 2 orders of magnitude off in terms of those trade execution latencies. And so you see a lot of the flows that are happening on chain, especially on the perps markets, which move very quickly. It's a lot of centralized, decentralized arb. You can imagine one venue is updating very quickly, over 10x the rate of the other one. And you're just kind of like, someone like Wintermute is just sitting there and always doing this arbitrage, essentially. And so on-chain can never really compete in terms of being the primary venue for price discovery. And that's why with Bullet, we really wanted to, like, our main focus, pretty much in our main unique value proposition is like, let's bring those latencies down as much as possible. So in production, in testnet right now, we're seeing kind of end-to-end trade execution times of 3.5 milliseconds, essentially. And that's because we run it in pure Rust. There's no virtual machine overhead. It's like very performant. And we also adopt this continuous streaming model. So we don't have discrete blocks. Basically, as soon as your transaction is submitted, you get a pre-confirmation essentially right away. And this makes it feel a lot more like a centralized exchange while still being kind of transparent and verifiable. So that's one thing on slow block times. Next one was like congestion, essentially. When you're on a general purpose L1, you're competing with Pump Fund, you're competing with all these NFT platforms, you have this noisy neighbor problem, essentially. And so it was really hard running like a proper exchange where people need to cancel their orders, liquidations need to go off. And if you can't get your transaction through in the same slot, essentially, or even in the kind of next couple of slots, that degrades the trading experience a lot. And as a platform, that's actually quite risky. If you can't get off liquidations in a timely manner, you could actually go bankrupt as a platform because you are offering leverage, essentially. These things need to be very guaranteed. And yeah, we were just thinking like, why is an NFT mint going to bring down our exchange? This kind of doesn't make a lot of sense to me. Then there was some more kind of like trading related stuff that is basically like the kind of big topic right now of discussion in the Solana space. So all around adverse selection. So for the traders in the crowd, there's a big problem where you have toxic flow, and essentially if you're providing maker liquidity, people are coming there with informed knowledge or some kind of signal and being able to basically trade against you, make a bunch of money. And so right now, basically the meta is on Solana, it is fundamentally like pretty negative EV to market make across the clubs as well as across like a bunch of other kind of systems there. And those MMs just kind of bleed P&L. The reason is, and if I was to explain this in simple terms, imagine we have the Sol Perp, essentially, it's quoted bid price 99, ask price like 101 is your market. And yeah, so your kind of midpoint is essentially $100 for Sol. Suddenly, Binance, for some reason, who knows, Trump tweets something crazy or Elon Musk does something, the price basically just like jumps to 110 on Binance. Suddenly, you have this ask that's still on the book at 101. And you have this race, essentially. The maker is trying to go and cancel their order because that 101 is now very stale. And you have a taker bot racing in there and saying, hey, if I lift this 101 ask, I'm actually going to capture $9 of profit, essentially. And so it's negative EV in that the MM either has to bid up the gas fees as much as possible to like win in that GTO auction and get in there first and cancel, or they kind of risk losing and having their quote picked off and losing a bunch of money, like P&L on the exchange. So in either way, you're having to pay up a bunch of money, whether it's through the priority fees or whether it's through the loss of P&L. And so with Binance, they have this first come, first served model, which is a bit different to Solana, which is more auction based. Whoever has the fastest execution environment will basically wipe the floor with everyone else. And that's kind of what you're seeing with more of these HFT guys. Like they really dominate because they have really good execution infra. And so Hyperliquid took a really interesting approach. They added essentially this opinionated cancel prioritization. It means that when you build the block, essentially, your cancels or any kind of cancels for makers in there basically get executed by default first. And so that means that you essentially have what is in effect like a last look or a free option to cancel. And it kind of removes this adverse selection because the maker can essentially get out of the way as much as possible. This is nice in that they can tighten up spreads to like 1 basis point with a bunch of size, and they can be pretty confident that they're just not going to get sniped all the time. And so this brings down the barrier, I guess, to market making. Even if you're a random dude running a Python script, you can provide a lot of maker liquidity and not get completely destroyed by like one of these HFT companies. And so that kind of democratized a bit. So we've been playing around with that as well. We have a POC for that, this kind of like speed bump feature, which we'll also be adding because we really care about getting day one, like very good maker liquidity. And then, because I'm going a bit over here, we have a few other kind of features which are really nice. Gasless onboarding is really good. We can kind of sponsor gas. We think it's really important when you come into crypto, you don't have to buy like random token, and generally like onboarding is a bit janky. We also work with Privy to kind of abstract a lot of that wallet experience, doing something more kind of similar to session keys. So you'll log in there. You don't need to buy a random gas token to start trading. Essentially, you'll just bring your USDC or whatever it might be as your trading collateral. You'll establish a session key, and then you can essentially just click trade, long, short, do whatever you like to do. This is kind of a pain point with our old platform, and pretty much every Solana trading experience on the L1 is you have to sign every transaction. The centralized exchange guys come in there and they're like, what is this? It's like slow, clunky, annoying. That's pretty much like all that we were trying to solve is like build something that is going to compete one-to-one with the centralized exchange, but have self-custody properties, have verifiability, all these other things.
Do you feel like Anatoly and the Solana team can build in these kind of features within the mainnet, especially priority cancel and this kind of things?
It's a good question. I mean, it's an active area of research. They have some nice blogs on it, essentially, and I've talked to them in depth about it. I understand their solution, but I think there is like, even if they do manage to pull it off, it's undoubtedly going to be quite a long journey for them. To give you the long and the short of it, they need to ship a bunch of like very core protocol upgrades. One of them being async execution, which I think is basically in development right now. That's kind of the prerequisite to multiple concurrent leaders. This is like a pretty complex change. I think the spec for it is pretty difficult to get your head around. I'm still kind of getting to grips with it. It's a big change. I don't think anyone's nailed it in any other crypto network. And to be honest, if any blockchain engineering team is to do it, I think the Solana team is the best. But I think realistic timelines, the optimists in the crowd say it's going to take a year. Probably the more realists or pessimists say it's going to take 2 years to ship. And the reason that's important is they want to add some kind of transaction metadata. It means that you can label your transaction on the Solana L1 as a cancel, for example, and then the leader will kind of be able to reorder them themselves. The problem is censorship. If there's a single leader right now on Solana, so it could just ignore it and just say, nope, I'm not going to do that. So if you have multiple leaders, you would actually broadcast it to, say, 3 of those leaders. You would have hopefully an honest majority that could kind of agree. But yeah, you still don't get the latency guarantees that we get, because all those 3 leaders have to communicate with each other. There's a bunch of kind of consensus and agreements going on there. Whereas with a roll-up, you just have kind of a single sequence that you get very fast acknowledgements, not just inclusion, but also execution. We think that's definitely the best for trading.
And then bridging and experience, if I'm a Solana user today, the bridge is how fast once mainnet?
The bridge will be very fast. We just finished our integration with Hyperlane. It's basically going to be the finality of Solana, which is 32 slots. And if you do that by 400 milliseconds, it's like 12 seconds essentially. that's in the worst case. That's if you fully wait for finalized. We think there's some clever stuff you can do, similar to what people do on L1 apps, which is they use a lower confirmation level. For example, confirmed essentially is once everyone kind of votes on blocks. And so we think we can basically issue a bridge confirmation within probably around a second, essentially. But then we'll have to do some smart UX stuff, which is like we don't actually let people trade until the 12-second like full finality has elapsed, but you will see the funds within your kind of balance at that time. And I think that makes it basically feel exactly like it otherwise would using an L1 kind of program.
But I guess the dollars that I have on your rollup is not going to be composable with all the protocols that exist on Solana mainnet today.
That's a good question. Yeah, we're still figuring out the interoperability and composability parts of that. Like, yes, fundamentally you have to bridge and we'll have kind of separate funds there. The nice thing is if you use Solana for DA, you can get some kind of asynchronous composability benefits. And I'm actually talking to guys like the VP of Solana Foundation, Solana Foundation for like a bunch of the engineering stuff to figure out ways that we can kind of try and compose with spot liquidity on Jupiter and some of these other platforms. Definitely like a tricky problem, but I think there's some ideas that we have, some designs that we think would be cool.
Yeah, I guess the lack of immediate day one composability, I suppose it shouldn't be an issue because people are not on there to like do DeFi stuff or Ponzi stuff. It's just here to trade.
That's correct. I think people largely agree that Perp's exchanges don't need to be composable. I think even a bunch of people on Solana kind of agree with that as well. And you've kind of seen this in practice. You look at all the big exchanges. You look at Binance is obviously the biggest example. I don't think they need to integrate with a bunch of other stuff. They just vertically integrate. They just own everything. Hyperliquid as well. You know, they've kind of like built a bit of their own ecosystem. They don't really need to compose with existing Ethereum primitives. DYDX, all these other ones, I think kind of just like own the whole thing themselves and it works out well for them.
Yeah, I suppose the beauty and the bull case people do talk about and eventually will become a reality would be the hyper EVM itself would be able to yank liquidity away from the perp DEX and utilize that liquidity for all sort of crazy things. So the whole thing is like hyper composable. I suppose is it on the roadmap? Is it easy to do for you to sort of allow for similar capabilities?
Yeah, really good question. So we have like a not too dissimilar setup on our end, which is essentially we have our kind of like core exchange primitives, which is going to be the perps, spot, and lending markets, which are kind of all need to gel together and need to be very high performance. This all runs, like I said, in a pure Rust runtime. We don't do virtualization. We don't have a VM essentially because we want really high performance and kind of highest potential, gas limits and not to deal with other constraints. But then we're going to ship, it'll be after mainnet, but hopefully sometime this year, essentially like a SVM module, similar to how Hyperliquid has Hyper EVM. And then the nice thing is you can essentially have these pre-compiles which let you talk between the kind of core base layer primitives as well as that kind of programmable smart contract environment. I think that's very doable. A lot of people have been building these SVM layer 2 rollups like Soon and Sonic and these kind of ones. So we're a bit different in that we're not purely an SVM chain. Actually, our focus is just being on this application-specific high-performance rollup. We're not building like a SVM L2 on Binance Smart Chain, which is kind of what Soon are doing. We're very focused on the trading use case, getting those kind of that perps exchange extremely good. And then if someone wants to build something composable in there, whether that be a vault or whether someone wants to build an Athena type product that does this like basis trade arbitrage and builds a stable coin off that will all be possible to do on the kind of SVM side.
That you will build.
Yes, we will have at least like the foundation for that. Whether we want to do that in house or work with external teams, ideally it would be good to kind of like build that out and work with other builders on that.
I see. I mean, it's a lot on your plate. I could see why you're kind of deprioritizing because the perp DEX is like the most important thing first and foremost.
I think my worry is like focus. Like that's something I see is kind of the problem with a lot of crypto teams is they're not focused. They try and bite off more than they can chew. It's like death by 1,000 cuts. They try and do 20 different products under the one hood, and there's kind of like a lack of focus there. For us, it's just like get the main thing out, make it really good, start kind of gradually expanding. Don't take on too much. Like I said, we're only a team of 15 people essentially, so there's only so much we can do. And I would rather deliver one really good product than 5 mediocre products.
Yeah. How soon can you get to mainnet? Like when should we expect the first transaction on the perp DEX?
Yeah, good question. I would say with high confidence Q3, probably early Q3. We're quite close. We just completed our mainnet audit a couple of weeks ago. All the fixes have been merged, and that's looking really good. The main things that we need to get done are just finish off the Hyperlane bridge, which is almost done, iron out any kind of other random bugs or kind of rough edges, and do a few more performance optimizations. But I think largely it's looking pretty good. We're like 95% done in terms of the feature work, so I'm pretty confident we can get out there quite quickly.
And then day one, when it comes to mainnet, I mean, it's nice that you have like Amber and Wintermute and Jump previously supporting you in venture round. Like, how deep are you in the discussion with them in providing liquidity day one, and what's their feedback so far?
Yeah, good question. So it's very important for us to get good day one liquidity. If you understand the exchange business, essentially, the thing you need to solve for, at least in the early days, is the supply side. No one's going to come trade on your platform if you've got 1% spreads and no liquidity. So you need to kind of solve that first. So we've been in pretty advanced discussions with a bunch of the guys on our cap table, as well as other kind of market makers in that kind of environment. We work with basically the three top on-chain MMs on Solana, as well as a bunch of the top guys on Binance already, and some of the top ones on Hyperliquid. And so yeah, some of them on our cap table have already been trading on Zeta on our previous platform, have done the integration. So we're in pretty advanced talks with them, just kind of getting a bunch of back and forth essentially on exchange feedback, API specs and stuff like that. These guys have been pretty instrumental, to be honest, in like how we designed Bullet. For example, I'll give a shout out to Tim, who's the head of DeFi at Wintermute, who's like giving me a lot of really good feedback on like what could have been improved with our previous product and how we want to change things going forward. So that's been really good. And I think those conversations have been very productive. And especially over the last week, I think we've seen a lot of renewed interest from people wanting to come on chain and trade on such a platform. Outside of the market makers as well, we have a bunch of people who more run funds and are able to deploy into DeFi strategies. So we've been chatting to them about essentially, we will have a similar kind of LP vault, which will help around like market making, funding, arbitrage strategies, things like that. So we see people kind of looking for yield and deploying into those strategies. So trying to get some TVL in there, I think in the early days, also very important. Yeah, that's pretty much the status. I would say those conversations are going well.
What was their feedback like? It was unusable at Zeta before, and we moved to Hype. That was great, and yours is way better than what Zeta was before, but it's still kind of like what's that like? I'm trying to dig a little deeper. Are they like, oh my god, this is fantastic, we're going to deploy the same level of capital and attention we have to Hyperliquid here, or are they like still picking favorites here and there?
That's a good question. I think speaking to the old platform, yeah, definitely they had some gripes with it, and they had gripes with all the Solana platforms essentially. One, just like a lot of the API interface is like very non-standard for traders essentially. You're using essentially like this JSON RPC layer, talking to RPCs and having to run your own RPCs, trying to get transactions included in blocks was like kind of a dark art at the time. Still, to be honest, is. They were also paying up so much for fees, like just really bleeding a lot of priority fees, like I mentioned, just to be able to replace their quotes. And fundamentally, like they just complained about they were struggling to be profitable essentially on chain. And so it kind of led to a route where you have to subsidize it heavily, essentially, for them to make money. And that's not really sustainable in the long term. So we took a lot of that back to the drawing board. And fundamentally, the thing that we want to solve with the new platform is we want market makers to be profitable, because then they provide really good liquidity, which means that normal traders can come in, they can trade with really good prices, essentially. And the more that they're kind of trading with the market makers, the more the market makers can actually run their business model and kind of profit off the spreads, which means they're willing to kind of quote even more competitively. That's kind of like a dynamic that you essentially see on Robinhood with Citadel and stuff like that. They want to be facing this retail flow, and it helps them get price improvement. And so with the new exchange, we're still in the process of integration, but so far it's way more snappy. They get acknowledgements back way faster. We're trying to basically mirror a bunch of our API spec around Binance, because that just like lowers the kind of lowers the barrier, I guess, for integration. You don't have to deal with an extremely custom setup. It's kind of stuff that you're familiar with, essentially. And getting those multiple millisecond confirmations makes it feel much better. People can kind of react very quickly to the market. So far, I think the feedback has been pretty good. And we're good at taking on feedback. We're always like happy to iterate. The nice thing is now that we have a bit more discretion over our infrastructure stack and like owning that a bit more, we can really fully customize anything and build the best possible solution.
Got it. Well, I mean, I think market making is one thing. having all the features you talked about and the API access, helps you get liquidity. I suppose the biggest challenge for any perp DEX historically, supposedly it was UI UX issues. It was like a clunky experience, but now it's getting to the point where getting non-toxic retail or actually aggressive directional flow has been the issue for a lot of these nascent startups. I guess the biggest question then becomes like, how do you actually plan to get the flow from actual users? What's your go-to-market plan?
Great question. And that's a really insightful observation there, because the thing that makes Perps exchanges go around is solving that demand side, essentially, having those retail people coming in there. The thing that you want to avoid fundamentally is bringing on too many market makers, or you have market makers on both the maker side, and then you have a bunch of these HFT takers, and then it's just very PvP, right? Like Jump is trading against Wintermute against the next guy. No one's really making any money, and it's just very toxic environment. And this is sort of what you're seeing on a bunch of the other perp dexes on Ethereum right now, and it's part of the reason why I think Hyperliquid ate everyone's lunch there. They managed to capture retail flow with a good product. Obviously, I think the airdrop helped with that as well, and it just got this sticky network effect there, which is really good. And the MMs really love quoting on there because they're like, I'm facing normal people, and it's much more fun. So that's a really important thing for us to solve for. I'm pretty confident we can solve on the maker side. So getting the demand side is really important. So what does our GTM look like to bring on real users? I think a large part of it is just having a very Solana native go-to-market is important. It's a big reason why we just didn't decide. I didn't want to go and build a Cosmos chain or build on Starknet or something or other, because I just don't think there's a lot of interest and you're not tapping into a base of users that is particularly interesting. But Solana, I think, has the largest MAU of any chain. There's just a lot of people using DeFi products, trading on chain, doing meme coin stuff, whatever it might be. And the good thing for us is we have a bit of pedigree in Solana. We've been around for 4 years. I know who most of the big on-chain traders and trading groups are. For example, I talked with guys for example, a Joe McCann who runs a fund. He's very actively trading, doing stuff like that. He's really wanted essentially a Solana native Perps exchange that's competitive. So working with those guys will get a lot of volume into the exchange. Targeting some of those bigger trading groups, I think also important, thinking about what regions we want to get into. There are some communities that we're pretty well aligned with. For example, the Bonk guys, I'm very close with the founder. He's actually an angel investor, and we've talked about some trading campaigns that we can do together. They have, hundreds of thousands of holders, if not more, which is really great. And something I like as well is just being the venue for Solana native assets, right? If you have pump fund coins coming off the bonding curve, that's great, up until maybe 100 mil market cap. But then above that, you're listing on the tier one centralized exchanges. What if we could bring that back on chain? What if we could really prioritize some of these really promising new Solana teams and give them a good club venue to essentially launch on? I think that would be really good. So that's on the Solana native GTM, which I think we have good edge because we have a background there. There's other just exchange playbook stuff that's pretty standard. Referrals, very important. All the centralized exchanges do this well. We previously ran a referral program on Zeta, and we had over 30,000 users come in through that, as well as $3.5 billion worth of volume, which I think is pretty good. We've done that before. It's just works very well. Trading competitions, very nice way to bring in a bunch of new users. Like I said, we hired this guy from Bybit, who essentially was pretty instrumental in running a lot of their trading comps, which I think saw massive ROI. And then there's a bunch of integrations that are important that can funnel in a bunch of volume and open interest to us. So one is trading terminals, I think, are a great entry point for a lot of professional traders. We've been talking to a bunch of the bigger ones. For example, the Teal Street guys we're pretty close to. They have quite a lot of users. We've been talking to aggregators like Ranger, I think you mentioned before, have been very eager to integrate us and send a bunch of flow our way. And this is a really great way to just get these sticky programmatic or professional traders who are going to have this repeat trading volume, which is important for us. And then, using this broker system, essentially, they refer us volume. People do these trading bots, grid trading, arbitrage, funding rate strategies. That's really good for us. There's the Vault stuff, which I talked about, which I think is just a nice way for people to get involved. There's white labeled front ends, which is pretty cool as well. This is something we're exploring. We have one thing cooking with an existing Solana team that I think is quite solid. They basically want to dumb down perps essentially for this more on-chain meme coin type audience. So it's one click to essentially long and short a bunch of stuff. They're building their own leaderboards, copy trading. And I think seeing the success that platforms like Axiom had, which kind of integrate both Pump Fun and Hyperliquid, I think there's definitely some strong PMF there. And then using this kind of brokerage system or kind of builder code system, I think is a nice way to give kickbacks and help those front ends kind of integrate and make a sustainable business model. And then the last one I would say is mobile. I think is something that's been underwhelming or kind of underexposed on the trading side. We have the chops on our team to build a mobile native app. We have some guys on our team who are pretty good with React Native. I think seeing the success of Robinhood essentially on the option side with a mobile first trading experience, that's been really good to see. And I think it's underappreciated in crypto. Even looking at Hyperliquid, they have a PWA. It's not super responsive. I don't think it cuts it super well. So I think there's good market there. And if you're following Solana, they're doing the Zeta phone essentially, which is their own kind of Solana phone. They're going to be launching their own token, their own incentives on that. And like I said, we're working with that gamified Perps front end team who are going to be launching a kind of a native app on the Zeta phone day one.
I guess so that's a good overview and coverage. Like, do you have a target in mind of what kind of volume you want to do in like the first week, the first month, first couple months, and so?
Yeah, it's a good question. I mean, the more the better, obviously. I think
Sure.
volume is a decent metric. We're also looking at like kind of monthly active users. I think open interest is also like an important one to get up. But last year, like I think we were routinely doing 1 to 200 mil of volume a day, essentially, which was like pretty solid. So I'm very confident we can get back to that with just like a few people integrated. I see Jupiter doing essentially 500 million to $1 billion a day, kind of fluctuates a bunch. I think that's like kind of the longer term goal is if we can build something that's a best in class exchange on Solana, I don't see why more of that kind of volume would essentially migrate to us and we could kind of assimilate a lot of that perps trading volume. So that's kind of my goal, I think, within the first 6 months to essentially just try and leapfrog our way to kind of number one on the Solana side. And then I think once we're at that kind of 500 mil level, we'll probably be number 2 or 3, hopefully, on the perps leaderboard. And then we can kind of continue to push from there.
So like basically $500 million to $1 billion daily volume. Do you expect most of it to come from the central exchanges? Do you expect it to come from share gain versus Jupiter of the world, or like Hyperliquid? Like, where do you expect it to come from?
Yeah, I think given that our GTM is very Solana focused, we don't want to go too broad and try and go after the centralized exchange trading audience. That's like the longer term goal, I think. But in the short term, those guys probably don't have a wallet. You got to get them to jump through some hoops. They got to like there's like some friction in the process. So we'd rather just work with guys who are on-chain native, who already basically have a wallet, who've already traded on Solana, who already kind of know their way around it. And I think seeing the volume that platforms like Jupiter are doing, I think that audience exists. And I think, to be honest, it's not necessarily like a cannibalistic thing of like, oh, we all have to fight for the same volume. I kind of see it as Hyperliquid was doing maybe 500 mil of volume a day like a year ago, but that's actually grown 10x essentially because I think the product is so much better. They've actually grown that category. And I think if you look at the emerging trend kind of on that side, DEX volume market share versus centralized exchange has actually been an increasing pie. And so I think the kind of small-minded mindset is to look at like, oh, we're all competing for the same 5,000 people, the same flow. When in reality, I think Hyperliquid has 30,000 daily active users and Binance overall has 260 million users. I don't know how much that is in daily actives, but I would imagine they probably have tens of millions. So I think that pie is much bigger, much greater, and we just kind of want to grow that and grow into that as much as possible.
And I guess the Solana guys are, it would really sound like then it would be the whales, the trading groups, and the funds that are very Solana aligned that will be taking their trading volume, let's say, from Hyperliquid today to you, assuming it's a pari passu product in day one.
Yeah, I think there would definitely be some crossover, and we're definitely trying to target more of that professional audience because we found that flow is just more sticky. Like people come in and trade every day, whereas if you just cater to a bunch of random airdrop farmers, right? Like they trade a bit, they get liquidated, and then they kind of churn out, and they do like a couple of $1,000s worth of volume, and like that doesn't really like help our bottom line or help our product grow. But the guys that we've had the most productive conversations with, like we just found you really only need like 50 people, to be honest, in a Telegram group all talking together who can give product feedback, who are going to kind of like stick by the product. And that's kind of what we built, I guess, through this like bear market period is kind of this like core following. And those guys come in and trade every day. They're day trading. They're kind of repeat volume, repeat customers, essentially. And I would say that kind of top end, top end of the market is essentially probably driving, I don't know what the number is, but it's definitely Pareto distributed. 20% of people are probably doing 80% of the volume. It's probably even more skewed than that, to be honest.
And have you gotten firm indication already from some of the Solana whales that will be like just moving over to, but they basically told you like, yeah, we're going to do it? Or is it more like this? Okay.
I don't know if I can share it, but yeah, I literally talked to one of the biggest fund managers on Solana. He said, if this platform was live, I would trade like at least 9 figures, if not like 10 figures on this platform, monthly tomorrow. So I was like, that's great. I'm glad to hear that.
Okay.
Because he is basically migrated from one of the existing Perp DEXs on Solana to Hyperliquid, and he's just like forced to trade there, but he kind of doesn't want to.
I see. Interesting. Okay, very good.
Yeah.
How much token do you want to give out as a part of this process?
That's a really good question. I think the most important thing is for us to get essentially organic traction as much as possible. I think if you rely too much on subsidies, you get kind of this points market fit, which is dangerous. You kind of like fake the PMF somewhat. So our kind of important yardstick is like, how much can we get people like genuinely trading on this thing? Try and build up the PMF, try and keep repeat customers. And then I see incentives is essentially kind of like gasoline on that fire. So that's something I really want to make sure that we have done before any kind of incentives really hit off in a big way. Once we start ramping that up, we're likely to have something like a points program or some other incentives. This was super effective last time that we did it. I think it's just like a really great growth tool. But our lesson learned there is, I think, focus on real long-term users as opposed to kind of trying to, I wouldn't say cater, but like, all these airdrop farmers come in, they're very short-term. They don't really care about the product long-term. They're just trying to farm a quick buck. And I think, basically like not prioritizing those guys, prioritizing the kind of early community, people who actually trade and care about the product is definitely the kind of main tweak that we'd make there. So I can't share like concrete numbers on how much we would potentially give away, but our goal is definitely, we didn't give away too much on the previous token. We still have a bunch that we can kind of earmark from our incentive budget and treasury, which is good. So I think we have a pretty healthy amount. And I think our big learning there is it's important to have an early wealth effect for users. So building that loyalty and kind of rewarding people for being early and for using the product and helping us scale is definitely something that we saw work very well on the kind of hype drop. They have this like massive maxi community, and I think we would want to build a similar community essentially.
Yeah, and just so we have a sense, like it's a 20% float today of ZEX. Yep. How much did you give away for airdrops?
It was 10% for the previous airdrop.
Okay, and how much are you playing with now that you could potentially give away?
I mean, I don't want to commit to numbers, but I think we can definitely.
Yeah.
I think we have, I forget the exact number, but like in terms of what we have for, for like treasury and stuff like that, I don't remember the exact number off the top of my head, but it was something like we have at least like 30%. I have to do the math essentially. Yeah.
Got it. Okay.
Yeah.
And if you were to do it, it won't be like in one go, everything gone. It will be like, let's truncate it over seasons and so on and so forth.
Yeah, potentially. We're still kind of deciding that essentially, but whatever I think drives the most long-term growth will be the direction that we go down.
Got it. Understood. Mm-hmm. So the goal would be like, maybe like if you hit all your benchmarks, the goal within the team internally, it would be by year end, by this point next year, a year from now, like 10% of Hyperliquid, basically. If you can get there.
Yeah, pretty much. I think that's what we're shooting for. I mean, if you look at the volumes right now, like I said, Jupiter's the number one on Solana. That's basically 10% of Hyperliquid, which is doing about $5 billion today. So I think that's like an achievable target. That's kind of like my base case in my mind is where I want to get to in the short to medium term.
And that, like with that volume, I'm guessing you have like a HLP, so like a ZLP kind of, and then you have a bunch of other different type of fees. What would that overall, if you hit that target, what would that translate to in terms of revenue to like maybe Zeta token holders?
Yeah. Good question. In terms of like the vaults, we're mostly just going to pass that yield and essentially that P&L directly back to users. So that's not necessarily, at least in the early days, not like a big revenue source for us. We want to democratize that and give that back to community. I think it's nice not having to purely depend on external market makers, and that's why HLP was really good. Is retail can come in, they can provide liquidity on these things. There was actually like very good gains to have in the early days. But in terms of, obviously we run an exchange, there is a take rate and kind of trading fees that go through that. So yeah, having value accrual to the token was actually our number one most requested feature on the previous token. And so if we do turn on a fee switch, we would want to be pretty aggressive with it. I will kind of caveat saying these are all hypotheticals. This is kind of like how we are thinking essentially. So there's like not financial advice or anything, but like if you were to do some of the numbers, crunch the numbers, the guidance would be essentially if we were doing 500 mil daily volume, and let's say we take a take rate of about 3 basis points. I think that's kind of market standard. If you look at some of the other exchanges, Hyperliquid, I think their kind of taker fee is anywhere from 2 to 4.5 basis points. And on the maker side, it's a little bit lower, but like averaging out, let's say 3 basis points. That would essentially give us a daily revenue of $150,000. And if you annualize that, that's essentially 55 million. Basically taking their kind of proportion that goes back into their assistance fund buybacks, they do 97% essentially, which is pretty aggressive. I think we would also want to be pretty aggressive with that. We do want to beef up the kind of insurance fund a bit, but we also want to give a bunch back to users in the form of buybacks potentially. So let's say we take that number, 97%. That translates to $53 million of annual buybacks. Our current circulating supply, like we mentioned, is about 187 million tokens out of the 1 billion like total supply. And if you take the hype market cap to revenue, essentially multiple, you can find this on Artemis and a few other places. It's roughly 15x. So the implied market cap, I guess, if we were to multiply that through, would be 821 million. And I guess the current market cap where the token sits is about 35. So I think in that kind of case, you're seeing a pretty good multiple. I also ran the numbers essentially on the bear and what I consider the bull case. Bear case, I say, would be 100 mil of daily volume. That was like half of what we were doing, or kind of roughly similar to like half of what we were doing last year. And we had a much bigger take rate as well last year. I think it was about 6 basis points on average probably. And I'm modeling in 100 mil at 3 essentially. Even with that, I would say you run the numbers once again, the same kind of math. You would imply a market cap of 164 mil, so that's about a 5x. And then in the bull case, if you were to plug in $1 billion daily volume, which is basically 2x dupe or dupe on a good day, which is assuming that we can kind of exceed expectations on the Solana side, that would pit it at a 1.6 billion market cap, which is a 45x. And then I did the ultra bull case, which is like, what if we can compete 1-to-1 with Hyperliquid, or just kind of seeing how the numbers match up.
Yeah, the math
and that actually comes out. Yeah. I mean, it actually kind of comes out to exactly what Hyperliquid is doing in production, which is they're doing, my numbers came out to 820 mil in annualized revenue. Their actual annualized revenue is 890 based on Artemis. And then it implies essentially a market cap of 12 billion and their actual market cap is 13. So the numbers actually came out pretty close.
Yeah. I suppose, I mean, the numbers certainly make sense. And like the 3 bips is pretty standard. I suppose the biggest barrier, like in your mind, when you're plotting this and you're launching the platform, you know, like what keeps you up? Because, you know, the math makes sense. The token's going to do very well if you hit that number. But what do you think would be the biggest barrier between like what you have now and like maybe $500 million a day of volume? You know, is it, oh my God, like we could run into bugs? Like, is it like, oh, we have a pretty feature complete, decent product, but it's still a little clunky that I didn't get it to place I want? Is it, you know, oh, people are already pretty happy on Hyperliquid, you know, they probably don't want to switch over. Like in your mind, what would stop you from getting to that target?
I guess the biggest existential threat, or the thing that keeps me up at night as any exchange operator, is like, you know, worry of potentially like an exploit or a hack. Like that's definitely the scariest thing. And we spend a lot of time, obviously we just did a security audit, spent a lot of time like auditing our contracts, checking all the kind of different attack vectors and even kind of like financial exploits that could happen. For context, we've never been exploited over 4 years of operation, touch wood, even though like pretty much, I think every single Perps platform, save for Jupiter, has been exploited on Solana. I think Drift kind of famously lost $20+ million a couple of years ago with their kind of lunar markets and that kind of all imploding. Mango with the Abraham Eisenberg thing, they basically allowed for withdrawal of unrealized P&L, as well as they allowed margining in their kind of native token, which was extremely low liquidity and able to be manipulated. And so we've made, I think, a lot more, I wouldn't say smarter, but more conservative design decisions in terms of what collateral we kind of enable on the platform, what kind of assets we list, how we kind of tweak a bunch of these parameters. I think we're playing the longer term game where we need to be around for a number of years. We can't just like go hard and fast and take all these crazy risks and blow up. Like we're trying to play a longer term game. So that definitely keeps me up at night, but we have a really smart engineering team. We've really gone hard essentially on like monitoring, DevOps reliability. So we have like observability dashboards and everything. We're kind of like 24/7 monitoring a bunch of stuff. Everyone's on call. If something goes wrong, I get woken up at 3 a.m. in the middle of the night to go fix it. So we try and really be on the ball with stuff. In my mind, I feel like if we execute on the product and it's really good, and there's this kind of like captive TAM of Solana who are kind of excited to use the product, and from the conversations I've been having and from obviously all the traction that we've been getting in the last couple of weeks, I think there is some pretty strong PMF there. So I feel like if we just kind of keep leaning into that with a really good product experience, and we do all the right things and just kind of trim down our roadmap and deliver something that is like achievable, get there to market, I do feel like I'm quite confident that we will kind of get out there and start raising that volume.
Yeah, the way I see it, I guess it's the way of the Solana native guys. It's their way of getting their huge potential airdrop from rerunning the Hyperliquid playbook on a hopefully similar product. And I suppose because you have built a similar perp dex before on Solana, there are many attempts by other players also historically. Those never seem to take off beyond people farming the points. They never were sustainable like the way Hyperliquid was. Like, I guess you're confident today on you can potentially achieve that volume sustainably because the product historically weren't that good. Because is that how you would think about it? And this time it will be very different, or has there been new learnings along the way? Yeah.
No, I think you hit the nail on the head. I think, much as I maybe hate to say this, I think the bar is relatively low in crypto. And if Jeff kind of proved anything, they just locked in, put their heads down, and out executed like pretty much the rest of the market. That's pretty obvious. I think if you crypto tends to be more short-term horizon, I think. And if you can survive past, I think that first like 6 months to a year of operation is pretty critical, right? Like it's easy to raise money. It's easy to get a bunch of hype. There's all these like testnet products right now that are like, oh, we're the greatest, and that stuff doesn't matter, until you actually launch the product and you have users. Like, yeah, you get all the Twitter metrics and the engagement, but you're almost overfitting to the wrong kind of metrics there. You really need to be out there showing real growth potential. And I think that's why crypto has such a focus, for the worst, I think, on infrastructure. It's because infrastructure doesn't have to show real growth metrics, right? If you were like a real Web2 app, you have to show that you're growing. Otherwise, like no one will find you and your product will die, essentially. For some reason, people get around it in crypto and last for a couple of years in this kind of zombie state. And it's a big reason why I think people are scared to do apps in crypto, right? Because it's goddamn hard to do because you actually have to grow. You actually have to have real product market fit. Very few products you can kind of point to and say that they actually have this. And so from our perspective, that's always been the focus for us is I'm not a marketing genius per se, but I think we can do the product growth really well, which is I want to get to a position where the product essentially sells itself. We saw this kind of happen on exchanges like FTX back in the day. We actually had a guy back in the day who joined us from FTX, and he said, my job was the easiest in the world doing BD for FTX because literally I didn't have to like push it on anyone. The product was so good, people would just use it immediately because it was the best thing on the market. And that's kind of where I want to get to. And then my other point is we've learned a lot over the last 4 years. And not to talk ourselves up too much, but like we made a lot of mistakes. We've learned from them. We've done basically derivatives trading product, Perp's exchange for 4 years. We've also launched a token before. There's like lots of things that you can mess up that you can learn from. We've kind of already made a bunch of those mistakes. So I feel much more confident kind of going into the next leg of the journey that we kind of know a lot more there. There's like a lot of bespoke, like firsthand experience. And then I see a bunch of these new kind of blob teams, Perp teams coming up. They're very hot. You got whatever, building on some cool new chain with some cool new founders, and they just raised a big round from whoever it might be. But yeah, they're going to run into a lot of the same problems. I see people trying to build fully on-chain order books like we were trying to do a couple of years, or let's do it on Monad or something like that. And I'm like, I don't see how this changes the equation. There's some like fundamental issues here. And like talking to them, I'm like, it just feels like they're like us like 2-3 years ago. They're going to run into the same challenges. So that's why I feel a bit more confident. We're kind of like a bit more veteran, and the team has kind of been through a whole cycle or multiple cycles at this point. And we've kind of done it before. It's not our first rodeo.
And then I guess just a bit more on the product itself, like listing and delisting of perps. Like, do you plan to be any different? And do you have a roadmap for stocks? I think Hype is trying to do that. And then like they also have Hyper Unit that is for like spot, like deposits. Maybe on those three things. How do you think about those three aspects?
Yeah, listing's super important. I think this is actually, I didn't touch on that in the go-to-market, but that is extremely critical. I think it was a big reason why Hyperliquid got a lot of attention in the early days. They did pre-market stuff similar to the Avo guys. I think that's just, even though it didn't do a lot of volume, it's a great kind of top of funnel acquisition strategy. Bring new people into the platform who kind of want to get into these new markets. And funnily enough, you actually saw innovation leading on the DEXs, right? Then Bybit started copying it. Then like Gate started doing, like pre-market stuff. So it was good. They were kind of on the bleeding edge there. And so for us, that was a bit harder to do on our previous product because, getting the kind of Oracle feeds, putting that all on chain, setting up a market, like probably would take us like a day roughly, like turnaround. It was a bit of a painful process with like a few moving parts. But with the new model that we have, the Oracle setup, we're working with the Pith guys on that. They have a new Oracle essentially, which they can spin up a lot faster. So we're hoping, or like my internal SLAs, we want to get these new listings out in a couple of hours. If we're taking too long, we've kind of failed there. I think that's like really important. I think your other question was essentially on bridging hyperunit stuff, if I'm not mistaken.
Yeah, like the spot trading on Hyperliquid itself through hyperunit. Yeah, the custody. Yeah.
So yeah, we will have spot trading as well. That's pretty much mostly built. We're just kind of like putting the final touches on it. We think that's pretty important, and it's also a fundamental component of our kind of unified trading account. We kind of took some notes from essentially how Bybit had done theirs. We think they have a really good system, and this allows for kind of collateralizing your positions, not just in USDC like Hyperliquid does, but in Bitcoin, ETH, Solana, G2Sol, whatever it might be. This is like a really nice feature that people have. This kind of unlocks the whole lending side as well as the spot trading side. So it's kind of this nice trifecta of products there. And like I said, getting the bridging experience really good is super important to us. So we're focusing on making that very fast and painless. On top of that, yeah, I think a big draw for Hyperunit is this like native Bitcoin angle. I think there's like a lot of TVL there. Actually, our kind of one of our kind of like BD guys has actually really been pushing this on me. Is like, we need native Bitcoin, and I've been talking a bunch to the Zeus network guys who have ZBTC on Solana. I'm very good friends with the CTO there. He basically re-implemented the Bitcoin virtual machine in like Solana smart contracts in the SVM, which is just like crazy smart stuff. But yeah, he said basically he looked at Hyperunit's model and he's like, yeah, threshold signature scheme, we can do something. Well, basically our product is pretty much comparable with them on the Solana side, which is good.
Interesting. Okay, well, good luck on the launch, I guess. And then if you do get the buy-in and the shifting of volume and people kind of get the sense of the token incentive, like it should just kind of work, assuming the product itself stands up. And then onto the product, Zeta would do a one-to-one mapping and migration of the ZEX token to the Bullet token. Can you walk me through how you think about that?
Yeah, sounds good. Yeah, I mean, we had already launched a token. I guess now that we've done this rebrand, we have a much more grand vision in terms of what we're building with the whole network extension for Solana and really trying to take on bigger market share. We thought it was important, I guess, to reflect that in essentially the token. It's going to have much more refreshed utility, which is going to be much stronger. So using that in the actual proven network potentially as the gas token, giving trading fee rebates essentially is like a very standard exchange feature. Some of the kind of revenue kind of or value accrual mechanisms, which will go through essentially like a fee switch decision. All those we think are much better. And yeah, we didn't want to launch a second token because I think it's a lot to manage. And I think it's also like probably not best faith. So we decided to, similarly to how we're taking the product and moving it all over into the bullet stuff, we're going to do the same for the token essentially. We already have a bunch of people we have almost 35,000 holders. So that's really nice. We kind of initially with the token had a year cliff essentially. So we didn't want any investors or team or anyone else kind of unlocking before then. We wanted a full year to like get it out to community, get as much distribution, as many holders. We had about like 15,000 stakers as well, which is pretty nice. Like those people that have blocked up essentially for a couple of years. So it's kind of gotten out there in the community. And I think especially we've had a lot more kind of buy interest recently, which is great. And so I think that's kind of a nice base. And anyone I think who wanted to not support the project and like exit during that kind of bear market period or over the last year had the opportunity to. So I think we have quite a strong holder base now. And so we're going to be doing a one-to-one token conversion. We think that this is probably the most fair thing to do for the people that have been supporting us since the early days. And so that will happen essentially around the time that we do the TG for the new token. We'll just have some essentially like conversion portal. People can go in there and they'll have a period of time essentially post TG to be able to convert their tokens into the new token.
And this happens after mainnet of Bullet.
Yes, that's correct. So yeah, like very fundamentally, and this is an important point to mention as well. A lot of people have been bringing up the point that like, oh, investors, it's like we're coming up on a year, investors must be unlocking. There's going to be this like supply shock or like overhead. We actually did something, which is we basically reached out to all our investors and like obviously chatted with our team. And we negotiated with all of them. We want to basically push out vesting until TG. We don't want to have any of this supply overhang before the token comes out. And fundamentally, like you said, I want the mainnet to come out. I want it to be successful. I want to get traction on that. And we don't basically deserve any tokens until we can kind of hit those milestones. So that's why we've decided to push all the vesting out until like the new token comes out.
Immediately, or maybe there's still a time lag between the TG itself and sort of maybe like a month, 3 months or so after they can start clipping.
Yeah, potentially there might be a little bit. We're still kind of deciding on the exact details, but we will do the thing that I think maximizes the benefit for community, essentially. We want to get people in on the ground floor. We don't want to have any kind of negative externalities there.
Is there more tokens granted? Like when, let's say, ETH to Aave, there's like this additional 20-30% portion for additional, like, is there anything like that or no?
No, it's just one for one at the moment. Yeah, we're just keeping it simple.
Do you expect all of the flow to convert over? Or do you think some is already lost? Maybe like 80% conversion rate. Yeah.
It's a good question. Yeah, I'd probably go with something similar to that. Like, to be honest, we had a claims mechanism for our original airdrop after the whole like point system, and I think 80 to 90% roughly was claimed. So there was a bit that people either forgot about, or I don't know what kind of happened there. I guess people churn out of crypto as well, to be honest, through the bull and the bear cycle. So I imagine probably a similar kind of conversion rate will happen there, but very hard to say.
Yeah, and then it would seem like you're strongly intending to copy, or not copy's not the wrong word, but like learn from what really worked well with Hyperliquid, with especially the fee-induced buy and burn. And looking at your FDV of $200-300 million today, with I don't know, like a $30-40 million circulating, if you hit your target of $50 to $100 million cash flow every year, fully dedicated towards burn, will have a huge impact. Obviously, I guess how should we think about the decision being made about the buy and burn of most of that cash flow?
What's your question specifically?
Like, are you going to decide it? It's going to be like a pretension of voting by the community, but like it's really just investors like us voting, say yes, and then like the burn starts. Because I think Jeff just decided, like the AF just kind of started buying and burning. Well, not burning, but like they're just buying but locking it up. I suppose nothing stops you from doing the exact same thing without any sort of
I mean, we want to try and avoid any, like, it's not a like, we don't want to make like kind of these centralized decisions, and we also want to basically do stuff that's in the benefit of the protocol and work with community. So that would definitely be something that goes down to a vote. I think we want to model out the numbers as well. And there's like a good bunch of people who've been early supporters who I think have like good quantitative understanding and expertise who have kind of modeled out a bunch of this kind of stuff. So we definitely want to get their input essentially on what numbers make sense, you know, how aggressively we should pursue this and coming up with the right parameters. But I think there's a ton of interest. I don't imagine there will be pushback from the community on this. I think most people will be generally on board. I think you've seen similar things like Jupe, I think, also announced their kind of buyback thing a couple of months ago. I think overwhelmingly positive kind of feedback and push from the community to have such a mechanism.
But that's not 97%. See, here,
this is
Tristan, I would strongly advocate for like almost all of it. And I think it will be a huge impact.
Internally, yeah. I don't want to commit to an exact number, but yeah, our goal off the bat is to recycle or reinvest as much as possible into the community and into the growth of the exchange. We think this is very important. Like we need to be doing this off the bat and for probably the next couple of years to really grow. Because I think the market share in the pie is going to get really big. And I think, it's just not conducive, or we're not in a rush to like take profits or stuff like that. We really want to give that back to community, and having that flywheel and starting that flywheel, something that Hyperliquid did very well. They're basically giving back almost 100%. You know, they never raised any VC funds. All these kind of things make a lot of sense. And that's how you win community sentiment, to be honest. And I think if you're looking at some of our other competitors on Solana, then they're not doing that. They're kind of probably taking a bunch of profits themselves centrally. You know, they're relying on grants, essentially. They're raising like huge rounds from VCs. So we definitely want to take the more kind of community-oriented approach.
Got it. And when should we expect something like that to be public for everybody to vote on or sort of at least observe?
Good question. I mean, it would definitely need to be, I would like to have it pre-TG. So I imagine the next couple of months. It's something that I'm now thinking a lot about. Definitely by like end of the year, I would like to accelerate that. And it's such like an important catalyst. I want to start that conversation early, get people excited, get a bunch of input as early as possible.
Yeah. I know we're running up on time. Maybe just like one or two last questions. You've raised about 13.5 million historically through 2 rounds of fundraising. Do you have an equity entity, or will kind of all future value accrual go to the token, and how much of that treasury is left? I guess you have to fund yourself through your own token portion. You know, just kind of walk me through all of that.
Yeah, sounds good. We've only done kind of token sales and raises, and everything's around the token. We kind of don't have that equity structure essentially. In terms of our raise, I think it was around $13 to $14 million, like you mentioned. That's put us in a pretty good position. We raised 21, 22 essentially in kind of that bull market phase of Solana that kind of carried us through. We did a smaller, essentially like friends and family or like angel raise, essentially like Anatoly, Mert, a bunch of other people last year, which was kind of nice to just get a bunch of the Solana builders in. But generally, we're in a very strong financial position. That's right. There was like a much smaller round though. It was just kind of like an angel thing. But yeah, we're in a pretty strong financial position. We have over 2 years of runway. We're pretty comfy. We're like relatively lean team, so we don't have like massive kind of operating expenses, which is pretty nice. And yeah, we're kind of not going out there and necessarily doing any private deals, I would say, at the moment. We think we're well capitalized. We have mainnet around the corner. There's a lot of really exciting releases for us. So we want community to kind of get in the ground floor. We've seen a lot of people just essentially going out there and kind of investing in secondary markets, and that's been working pretty well. And I think people have been pretty happy with that. We're always trying to improve the kind of on-chain liquidity as well. Like literally last week, we tripled our on-chain liquidity, just working with market makers and kind of getting more capital in there, because I think that's like a really good way to go. And if Hyperliquid is any kind of example of that, it's really nice that it drove a bunch of people on-chain to their exchange to buy it as well. And I think looking ahead, essentially, like who are the comparables or things you could benchmark it to? I guess you've probably mentioned that there's like other kind of SVM L2s that kind of sitting at the, 400-500 mil kind of FDV range. I think guys like Sonic, if you're looking at the Perps vertical, essentially there's guys like Drift also at like 400-500 mil essentially. So I think market is already starting to re-rate and price some of that stuff in. I think there's still a bunch more breathing room potential. And then obviously Hyperliquid is on an absolute tear right now, kind of 40 to 45. So I think people can kind of do the moon math a bit and kind of look into that. But yeah, course, not financial advice, but yeah, we're not in a rush right now to raise. I think we have time on our hands. Essentially, our focus right now is get mainnet out as soon as possible. And then if we need to really aggressively scale the team, it's something that we can prioritize a bit further down the road.
Tristan, thank you for your time. Good luck on the execution.
I appreciate it. Thanks for having me on.
Thank you.